Coming up today, the latest from Apple, why UPS is nosediving, along with Microsoft, a look at US growth, France's economy shrinks, gold breaks out, and why a new global economic reality could be about to start tomorrow night. You don't want to miss this one, guys. Let's go. And welcome back, everybody, to the Click Capital Daily Market Review. If you're new here, my name's Jared, and if you're into trading stocks, ETFs, and options, then you've come to the right place. Make sure to hit that subscribe button, because I make these videos a couple hours every day after market close to get you updated on all the most important news, data, and charts across the market. And stick with me today, because I'll share with you a couple of my favorite stocks later on in this video, let you know what I'm invested in, and where I see the risks and opportunities out there. And so we're just looking at a 5-minute chart of S&P 500 ETF here, SPY, consolidating most of the day up and down, and just after 3:30, half an hour before market close, news hit the wires that Trump told reporters at the White House he is going to slap a 25% tariff on Canada and Mexico starting Feb 1, and that is tomorrow midnight after markets close. And so really getting down to crunch time here, the biggest and clearest threat yet, Trump is going to go ahead with tariffs on Canada and Mexico, potentially this weekend. And that's what caused the S&P 500 to immediately react. Across the board, stocks sold off pretty sharply there, but was soon met by a wall of bids, and even more volume came in and bought up that dip. Pretty good technical tell there on the market. And we can see that hit the Canada ETF immediately as well. Quite a large uncoiling. Prior to that, did recover somewhat, but not as much. Looking at the Mexico ETF, EWW, that got hit hard immediately, have a little bit of a bounce, but it's still yet to be seen how these will trade tomorrow. As like I said, news only hit the wires just prior to close. So stocks that could be potentially affected by this are those that have assets in Mexico and Canada that they then use to import into the States, General Motors being one of them. For decades, they've been farming off production south of the border, along with Ford as well. Then you've got other stocks like Canadian National Railway, CNI, which operate railways between Canada and the States. Same with Canadian Pacific Kansas City, CP, just one of a few stocks reacting to this news. And more importantly, will be the effect on crude oil. Canada exports the majority of its oil south of the border to the States. And so crude initially spiked off that tariff news this afternoon as well. However, it too since pulled back, as we still don't have a clear-cut decision from Trump whether oil is going to be included in the 25% tariffs on Canada. And interesting, China did sell off somewhat after this news as well. This is definitely a clear warning to the Chinese. If Trump's willing to go ahead and slap 25% tariffs on his neighbors, he very well could do the same on the Chinese. So maybe he needs to put some tariffs out there to show that he's not bluffing, which could prompt a better deal getting done with China. Otherwise, they may face the same thing as well. But overall, Chinese securities still performed well today. FXI up 2.3%, the tech-heavy KWeb up 3.9%, and stocks I'm a long-term holder in, Alibaba, having another great day. Gone into their earnings as well, up 6.2%. We've had a massive rally in Barbara over the last few weeks. Screaming out of the gate for 2025. Another one of my Chinese-related favorites as well, Tiger Brokers, seeming to hold ground here today. And in fact, just looking across my watch list of international stock indices, we are for sure in a global bull market. Green across the board, not a single country ETF was down today. The likes of Chile up over 3%, Poland breaking out, one of the best performing country ETFs so far this year. Colombia, still got a dividend yield north of 5%. And one I've had my eye on since late last year, due to it getting technically oversold. Monster dividend yield above 8%, which I was pointing out to you guys last year on that big bullish divergence on my DSI indicator. Brazil, ticker symbol EWZ, breaking out here today. Very well could have put a bottom in here for the year. And it's looking pretty good on the monthly chart as well. May have just put in a monster bottom. And so not only does it have a huge dividend yield, this is a good diversifier on a commodity-focused country. Of course, the risks coming from their socialist government as Lula's got back in office. So for sure, it won't be a walk in the park. However, I think those risks are accounted for in the price. So this is definitely a country we'll be paying attention to this year, just like we had been doing for Argentina, which was the best performing stock market last year, thanks to Javier Milei turning around his country, off to a great start this year as well. So even though the market initially reacted negatively to this tariff news, like we'd been forecasting for this month of January, shouldn't be surprised to see some volatility, as tariffs is forefront on traders' minds. One of the biggest themes playing out in the market at the moment. We did see that quick buy the dip. However, I think this is a long-term positive for small caps in the Russell 2000, as a higher percentage of stocks in this index are domestic producers versus the S&P 500, where pretty much half the index in production and sales is offshore. And since we have been consolidating here for a little while on the Russell 2000, for a few months actually, most of Q4 going into 25 here, I wouldn't be surprised to see a rip in this tomorrow or potentially next week. Trump also wants to get a lower corporate tax rate for those that produce in America, not to mention attracting huge domestic investment. So net, I think this is good for small caps, which I've still got a strong tilt to in my portfolio. In fact, my stock picks portfolio, which is heavily focused on investing in high growth small cap stocks, is currently sitting at all-time highs. Click the link below this video if you want to check that out. But it's not just those key fundamental drivers for why I'm still favoring small caps this year. We're also still got a massive divergence between the valuation in small caps and large caps. And so just looking at this scatter plot here of the valuation gap equal or greater than today's, since small caps are really cheap relative to large caps. On the left here is the relative 5-year forward returns. And so you can see a clear correlation between the cheaper small caps are relative to large caps and their forward 5-year performance relative to large caps as well. And so this has pretty much always led to small caps to outperform, and they have been underperforming quite a lot these last few years. And here's a look at a long-term monthly spread chart of the Russell versus the SPY. As you can see, it's really come off hard these last few years. In fact, we're down to lows we haven't seen since the early 2000s, in which you can see small caps significantly outperformed large caps pretty much that entire bull market into mid-06. We had a big divergence before the market actually rolled over in late 07 going into 08. Consolidated for another decade, and then the last 5-7 years has really been a story of large cap, mega cap growth outperformance over small caps. But this could be signs of a base down here. But of course, it's still got some more work to do technically before we get a clean breakout into that sweet spot of a stage 2 advance. But I think now's a good time for opportunists and contrarians who have a bit of patience to tilt somewhat towards small caps. I think they have a real potential to outperform over the coming years. And Trump's America First policies should add tailwind to that, looking to incentivize domestic production and investment while making everybody offshore foot the bill. So we'll just have to wait and see whether oil's included in that. He really does want low oil to help with economic growth, and maybe he'll exclude it while putting the pressure on Canada with a blanket tariff on most other things. But anyway, moving on from tariffs, getting into the other big news we're getting out today, earnings from Apple. Just heard their overall sales rose during the quarter. However, their signature product, the iPhone, sales actually declined slightly on a year-over-year basis. We're still yet to see them get back to good growth and losing a bit of strength in their second most important market, China. Sales declining 11% during the quarter. But Tim Cook did say iPhone sales were stronger in countries where Apple Intelligence is available. So market really betting we can see a big upgrade cycle as Apple infuses AI into their products. Did come in with a slight beat on EPS, 240 versus 235. Same deal with revenue, although iPhone missed by quite a bit. Still impressive gross margins for a company of its size, just under 47%. And they are still a cash machine. Apple said it would pay a dividend of 25 cents per share and spent $30 billion on dividends and share repurchases just in the first quarter alone. There's a look at the daily going into earnings. Did have a bit of a bounce back to start this week off, and just going down a 5-minute chart after hours as I speak. We did initially sell off on the initial numbers. However, the market's liking what they're hearing on the conference call, and we've popped back up, currently up 3.3%, sitting around 245. So we're getting into the thicker Q4 earnings season right now. Just heard from key transport stock UPS. Even though they came in with a decent beat on expectations, market sold them off hard, as it looks like UBS and Amazon are on the way to a divorce. And so Amazon's UPS's largest customer, and they announced they would reduce their volume with Amazon by 50% the second half of 26, as Amazon is continuing its long-held mission of owning much of the supply chain itself, including logistics, not to mention their years-long push into automation and robotics. And that certainly had the market repricing UPS today. Pretty sizable move for a blue chip, down over 14%. However, did put in a monster hammer candle formation there. Some investors taking advantage of those low prices. And there's a look at Amazon, which we'll get to hear from them this time next week. The world's largest credit card company, still doing really well, as it still enjoys a duopoly with MasterCard around the world, reporting $5.1 billion in profits for the final 3 months of 24, up 5% from the year prior, and the market continuing to love this stock. Brand new all-time highs today. On the other hand, the stock market's second largest stock, Microsoft, not doing so well today, down over 6%. Even though they came in with a slight beat on their earnings yesterday, still reporting crazy growth from Azure and cloud, 31%. However, their guidance for third quarter revenue did come in a little shy of what analysts were expecting, and maybe some investor concerns about the valuation of OpenAI. Threat coming out of China appears to be choking up the stock somewhat, kind of been trading sideways for about a year now, with a market cap still north of $3 trillion. But it's not all bad for tech. The former dominant tech stock for decades, Big Blue, IBM, actually having its best day since the dot-com era, as it too looks to start cashing in on AI. Whilst they don't have the same consumer-facing brand strength as the mega cap tech, they are still big in the business enterprise world. They have positions in AI, quantum computing, cloud, automation, and maybe this former market darling is coming back. Onto investors' minds now that it hit all-time high today, up almost 13%. Just going out to a long-term 3-monthly chart here. It's done a massive rounded bottom and base, really charging up to new highs. And some blue chips can do this. Some of you may remember Walmart actually ran up in the late 90s, kind of peaked out and consolidated pretty much a decade and a half. It went nowhere. Then it broke out to brand new all-time highs in 2017, and it's just absolutely skyrocketed, especially the last couple of years. For a big defensive blue chip stock, simply incredible. Its run over these past few years, market cap just under 800 billion. But of course, probably still the most controversial stock in the market. People either love it or hate it. My social media feed over the last 24 hours, full of Tesla investors, super excited by the earnings call last night with Elon, and others just absolutely hating on it. Like this guy here. Tesla is a colossal pile of trash, but we have a lot of not smart people who buy stocks and they disproportionately own Tesla. So that's his thesis behind the valuation. Once again, the classic, throwing the intelligent investor book in the trash. So many people can't comprehend Tesla beat numbers. Why is the stock up? Doesn't make any sense. But I agree with those more optimistic, like Stephanie Tyler. The future isn't some distant dream, it's right now. We are truly living in the golden age, but most people are too busy doom scrolling to notice. These are amazing things going on right now, and Tesla is at the forefront of them. And so anybody that's listened in to earnings calls with Tesla, no, last night Elon was probably one of the most bullish he's ever been. Definitely not something new for him. Been like that ever since he IPO'd the stock 15 years ago. And the critics are as loud as ever as well, just saying he's hyping up the stock, his claims are BS, so on and so forth. However, what those critics don't understand is that's Elon's job. Just like it is every CEO's job to try and attract a premium valuation on their stock, gives a halo effect on confidence right across the business, in addition to being in a much better capital position to grow the company. So Elon and his team know that. They're focused on market cap because he knows a premium valuation is needed to win in all his company's missions. So whilst critics say the only reason Tesla has this valuation is because of Elon's hype, that's actually a strength. He's the best at doing it. So for sure it's not cheap, but super high quality businesses like Tesla, Amazon, you name it, they rarely get cheap. They're expensive for a reason. And so he did make some pretty bold claims last night. Tesla will be worth more than the top 5 companies combined. He said a $500 billion investment in AI training would be worthwhile. Thinks 2025 is a pivotal year for Tesla, actually launching full self-driving in Austin in June. Cybercab and Optimus production starting this year and ramping up next year, which he thinks will eventually reach 10 trillion in revenue. Thinks the compute needs for Optimus will be way greater than EVs. And I agree with all that. I think Tesla will inevitably be the largest company in the world one day and will eventually tower over the rest. And no doubt the bears will still be screaming every year of how overvalued it is and how Elon's just manipulated the stock. Whilst they don't have any problem with other companies doing the same thing, they're just not as effective. But anyway, I think the perma-bears and Tesla is what also helps it keep a premium valuation. And just looking at my themes watch list, which I'm continuing to build out for this year, pretty nice bounce there in the nuclear trade today. Oklo pushing up on monster volume. Same with Nano Nuclear, NuScale somewhat as well, and Lightbridge. Some of these stocks may be poised to break out again. Certainly heavy signs of accumulation going on here. And some of these other power generation stocks bouncing back pretty good after we started off the week with a DeepSeek scare coming out of China, which rattled the nuclear power trade, seeming to fill that gap in at this stage. Vistra can see a lot of bullish seasonality coming in over the coming weeks and months. Space trade still holding up and a bit of a bounce back in the AI trade today somewhat, although NVDA still boxing up here. Could be setting up for a epic island reversal if we were to gap up tomorrow or next week. Other than that, AI stocks holding ground here today. And another stock you want to keep an eye on this year, Recall Systems. Still a micro cap stock, 171 million market cap. And technically we're getting some huge signs of activity and interest in the stock. Still really low priced here, $1.83. So obviously highly speculative, volatile stock. And here's a look at their website. They're involved in roadway intelligence. Using AI, Recall collects, connects, and organizes the world's mobility data to deliver revolutionary roadway intelligence, laying the foundation for a digital-enabled operating system for the road. So again, this is inevitable stuff. Automation on the road. Industry is still very nascent and just kind of being built out. No doubt there'll be clear winners. And to see any stock involved in AI with a market cap still under 200 million, especially in this market where animal spirits are running high, this could have the potential to rip this year. And they actually already have revenue over the last 12 months, over 35 million. So not that bad on a price to sales ratio either. And like I said, we are getting some interest in volume coming into the stock. So that's definitely one to keep an eye on. And stick with me today because at the end of this video, I'll share with you another one that just got positive news today as well. But isn't it interesting how narratives can just flip and so quickly? We started the week off, most of the online world freaking out saying the AI bubble's now over because of a $6 million knockoff coming out of China. However, now that narrative's been wound back and we're getting more and more news that DeepSeek really just copied OpenAI. Surprise, surprise, right? So again, that spike in fear was proven to be another buy the dip opportunity, but Just moving on to some macro, looking at the growth of the US economy. Did slow somewhat in Q4 last year, however, consumer spending still holding strong. Consumers are still largely employed, gas is doing okay, rates have come down a little bit, still got some cash to spend. GDP growth came in at a 2.3% annualized pace for the final 3 months of 2024, down a bit from 3.1 in the third quarter. But the biggest driver of the economy, consumer spending, rose at a 4.2% clip in the fourth quarter. Biggest gain in almost 2 years. About twice as high as are typically the case. However, business investment still has some work to do. We had been seeing some bright spots in manufacturing, but that's still largely been in contraction for most of last year. We're only maybe starting to get back to expansion in manufacturing. But what it does show is that American exceptionalism is still well and alive on these latest GDP numbers versus the rest of the developed world. We just had Eurozone GDP come in 0.9%, anemic growth. The US economy is still growing much better than the rest of the developed world. That should help retain capital in the States, prop the stock market and the dollar, whilst maybe also helping to keep a lid on yields, as US treasuries are offering better yields, especially risk adjusted when compared to other countries as well. And on top of that, the possibility of lower oil, and it's the ingredients for a continued economic boom. Also can see that in high yield bonds having a pretty good recovery ever since that sharp sell-off in mid-December last year. Also seen volatility come down as well, considering the macro backdrop, 15.8, relatively low at the moment. And so that's also bullish for equities, as those huge volatility target funds have to buy more and get more long the lower the VIX goes. But we could get some movement in yields tomorrow going into the weekend on the back of PCE inflation data due out first up in the morning. Economists estimate 0.3% rise in the PCE index in December, 2.6% year over year. ECB did cut rates again yesterday, their fifth in a row. Their focus is getting back onto stimulating the economy away from inflation. And that's because one of their biggest economies, France, actually contracted by 0.1% in the fourth quarter. They're going backwards. Got a huge budget deficit, growing pile of debt. Emmanuel Macron, one of the worst things to happen to Europe in my opinion, both economically and culturally. It's becoming so obvious now, they're getting forced to respond. Just heard that from the president of the EU Commission. With her posted on X, it's time to restart Europe's innovation engine. We have the compass, we have the political will. Now what matters is speed and unity, because the world is not waiting for us. Well, she's got that part right. And that's because Europe, innovation and economic growth is now a meme. It's become so obvious to everyone. And we heard that again from Europe's richest man, the guy behind Louis Vuitton, Bernard Arnault, in which he just said, I've just returned from the USA and I was able to see the wind of optimism prevailing in that country. And when you come back to France after spending a few days in the States, it's a bit of a cold shower. Complimenting America on their pro-business environment that's accelerating. Taxes set to go down to 15%. On the other hand, France about to raise their taxes to 40% on companies that manufacture in France, which he said is almost unbelievable. He said if you want to cool down optimism, it's hard to beat that, pointing towards too much bureaucracy that he said immediately needs fixing. But to do that, you have to have a big political revolution, just like we've seen in the States. Moving on commodities. Got gold breaking out to a brand new all-time high. A little bit of a pullback in yields, dollar helping it out. Maybe the market's still looking for a bit of a hedge on inflation. And so this looks to be continuing its years-long bull market. And I'm still holding my gold stocks. I'm still a gold bull. Have been ever since I started this channel, but I also like other commodities as well. I don't have too much in oil. I think there's a lot of downside pressure on the price with the new admin. Still a little bit is good for diversification. And like I got to show you, we did see a little bit of a spike on news of potential tariffs about to be enacted. Got an upcoming meeting from OPEC, see how they respond to any tariffs. Trump's still looking to do a deal with Russia. Oil could be a part of that. And interesting to see, we've had some peak fund outflows from the energy sector ETF XLE. Looking back in history, whenever we see these levels of outflows, can typically mark good buying opportunities. And that's probably because the energy sector largely underperformed last year, pretty much went sideways the whole year. And on the back of the view, Trump wants to drastically increase supply of oil coming out of the States, which is already high. Strong political will to get the price of oil down is for sure a headwind on energy stocks. However, their valuations and dividend yields still some of the best in the market. And just looking at sector performance, it's in the middle there, year to date, up 4% XLE. Interesting materials out in front. But just going to a 6-month performance chart, it's still actually negative with minus returns over the last 6 months, and discretionary stocks still doing the best. What could also be a huge contrarian trade this year, solar, which had been sold off hard the last couple of months, going into the election as well. But this is a long-term secular trend, doesn't rely completely on politics to advance. Solar power capacity nearly doubled between 23 and 24. Will be an important part of the huge demand for electricity, and this is another ETF and sector we'll be watching this year, which like I said has been in a bit of a steady downtrend for a few years now. I'm also still bullish on uranium for 2025. Like I said, that DeepSeek shakeout to start the week may have been another good buy the dip in this sector as well. Because I agree with this research piece coming out of Bank of America. AI is just one part of the nuclear story. I've been long uranium for a few years now, even before this whole AI bull kicked off, and that's just icing on the cake in my opinion. There's a look at the Global X Uranium ETF, still holding ground, has been consolidating for a few months here. Let's move on to crypto. Really strong political will there as well. Got a crypto super PAC amassing 116 million for the midterm elections, ensuring Washington stays crypto friendly going forward. We've got other country national banks considering Bitcoin for their reserves as well. One of the largest funds in the world, Norway's sovereign wealth fund, starting with a little bit of an investment in Bitcoin. However, ECB President Christine Lagarde says Bitcoin is unlikely to be included in ECB bank reserves, opting to stick with the more traditional safe haven of gold. We also just saw Bitcoin's biggest cheerleader, Michael Saylor, featured as the Bitcoin alchemist on the latest Forbes cover, as his net worth hits 7.6 billion as he continues to offload record amounts of MicroStrategy shares, both personally and publicly to the market, to fund infinite purchases of Bitcoin as he continues on his mission to corner the market. So we'll just have to wait and see if this time is different. And unlike some of his peers that also got cursed by the Forbes magazine cover indicator, Elizabeth Holmes, Sam Bankman-Fried, Adam Newman, and let's not forget CZ, who just got out of the slammer a few months ago after the government clamped down on the private crypto industry, kicked them all out, cut them down to size, and let Wall Street come in there and wrap their arms around it. Also get to hear from MicroStrategy earnings next week. Stock's been consolidating ever since that monster bearish reversal candle. And the pairs trade I've been watching ever since that day, long the Bitcoin ETF, short MicroStrategy, has still been holding up and performing well here. And just looking at the underlying, still pretty strong, consolidating for a few months, could be poised for another breakout. Looking at my seasonality forecast indicator, this is typically a time when Bitcoin can do well over the coming weeks and months. And also, as promised, another stock today that caught my eye. Just got news that AVRide and Grubhub bringing autonomous delivery robots to US college campuses. This is another nascent industry. First fleet of 100 robots are currently active on the Ohio State University campus and feature next generation models designed to handle high volumes of deliveries at a campus as large as Ohio State is expected to see. The robots are intelligent and reliable, even in challenging conditions like rain or snow. And there's a look at the AVRide website with a demonstration of their product. Last mile delivery robots are already a thing. They've already completed 200,000 plus deliveries from shops and restaurants, in addition to their auto-driving car. And AVRide isn't a standalone stock, rather they're owned by Nebus Group, which actually owns a couple AI-focused businesses. Tokeler, Triple 10, and AVRide being one of them. And there's a look at their stock. Market cap 7.5 billion. And again, this is attracting some pretty heavy volume here. And they're actually coming out of Amsterdam, Netherlands. So sometimes you see these offshore stocks, they're kind of not at the forefront of USA investors' minds, even though this is listed in New York. Sometimes they get left behind. And when they catch up, especially on a strong leading theme like AI, they can do so violently. So we're keeping an eye on this one this year as well. And this is similar to Serve Robotics, which is also involved in last mile delivery of food. They're a lot smaller though. Market cap still under 800 million. And just going back to Apple as I speak, still holding onto its gains, up 3% after hours. Got others like Intel trading up after their earnings after hours. Chips had a pretty good day. And the Qs, tech stocks overall, trading up after hours somewhat. After we got that initial sell-off of tariffs, market quickly came in there and bought the dip. That could be a telling sign. Any spikes in fear, there's a wall of money ready to take advantage of that. And like I said, we could be setting up for a good rip in the Russell 2000. Even if those tariffs do go ahead this weekend, I think that's a net benefit for domestic producing companies, of which the Russell 2000 is full of. So wait to see what the news is on those potential tariffs. We've got PCE inflation data coming tomorrow. We'll see how bond yields react to that, see how Apple trades, and anything else that makes it onto my radar tomorrow, I'll be sure to share with you as well. Thanks very much for supporting this channel. Hit that like button. I look forward to breaking it all down for you again this time tomorrow. Cheers.